Hello, everybody. I think we will make a start. So welcome to the weekly market outlook live stream thing where we do a couple of things. We look ahead to the major events for next week, and we'll take a look back at what's been going on with markets and some interesting markets to watch. As usual, if you can just confirm that everything's working okay, your end, the sound and stuff. We had US inflation data out about an hour ago, so we'll talk about that and see what the market reaction was like. So the format for this, if you've not attended them before, I'll go through some of the major markets. We'll have a look at what's been going on: indices, silver, gold, oil, crypto, bit of Bitcoin and Ethereum, some other currencies. Then I'll go back into the questions and take a look at the stuff that you aren't looking at. So that's it, really, pretty straightforward. Let's just do the risk warning. It's important to understand this presentation is only for educational purposes. This presentation does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences as a result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76.25% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. There you go. That's that. A quick look to what's going on next week. It's a big week next week, actually. I put this together only about half an hour ago, and I don't really watch economic calendars that closely. So the time I pay the most attention is when I'm putting together for this live stream. But there's a lot of interest rate stuff next week, as you can see. But Tuesday, first of all, UK unemployment. That'd be interesting. I mean, the pound slipped to its lowest levels this week against the US dollar on concerns of Plan B and lockdowns and all that stuff. Then Wednesday, UK inflation, clearly massive hot topic at the moment. We had that US inflation out an hour ago, came in at 6.8% over the year, which was the forecast. That was what was expected. And it's the highest annual gain in inflation in the US since 1982. So it's going to be a major theme next year for markets, inflation. But UK inflation on Wednesday, US interest rate Wednesday night. It'd be interesting again. See what the Federal Reserve, the US Central Bank, says about its outlook on interest rates and the economy. Thursday, UK interest rate, EU interest rate decision. I think, last month, running into the UK rate decision, the expectation was for rates to go up. But I think because of what's happened since then, the expectation is they won't go up this month. We'll see. So it could be a bit of volatility next week. And then on Friday, Japan interest rate decision. On Friday the 17th. So we'll see. We'll see how it all goes. Right. Let's just do the contact details. Go to Capital.com to find out more about the company. Open an account, open a demo account, download the platform, all that sort of stuff. David.Jones@Capital.com if you have any questions following today. At Jones the Markets is me on Twitter. JonesTheMarkets.com to find out more about the training course that I run. Follow Capital.com on YouTube, Twitter, and Facebook. Right, that's it. Let's jump into it. Before I start, this is the last market outlook of the year. I've just realised about an hour ago, because I'm not around next week, and of course the week after it's Christmas Eve, and the week after that it's New Year's Eve. So this is going to be the last one until, I guess it's going to be the first Friday in January. So it's going to be nearly a month till we do this again. But thanks for coming along this year. I do enjoy doing them. They're always good fun to do. The sort of quick fire rattle through the markets. But this will be the last one until the new year. So let's try and make it a good one. I thought we'd start off with the Nasdaq when we're looking at markets, just to see this market reaction to this. There we go. So I flipped it over to a 5-minute chart. To this inflation data out an hour ago. Came in pretty much as expected. You can see how the market's jumped. I mean, the data came out at 1:30 my time. So the market was about 16,200 let's say, and we're now at 16,324 on the Nasdaq. So stock markets like, I did say last week that the markets I would be watching this week would have been the stock markets, watching for a bounce, because we saw this pretty half decent sell-off in stocks. I think mainly due to the Omicron variant of the virus. And I said I was going to be looking at being a buyer of the Nasdaq and the S&P. I did actually buy the S&P this week. I think I ended up buying in about here somewhere and came out of it yesterday so I was in about 15.8 and I was out, I think, about 16.3 yesterday as it fell back below the low of the day before. So it ended up being a good trade, and that was really the only market I've done. I've got a trade running in the DAX as well that I put on yesterday, so maybe I'll talk about that. Let's see what I'm guessing that will have jumped up as well, the German market, because of what's going on. And the trades I missed this week, oil. I was going to buy oil this week, but I missed it. So I bought the DAX yesterday. I think I probably bought it about here, so it's only slightly in profit, but we'll see what the rest of today looks like. But let's go back and look at the dailies. This, of course, is the time of year where we have the famous Santa rally, where historically, I don't know what the stats are, but I think over the last 40 years, it's worked more often than not that stocks have a good December and a run into January, so a positive finish to the year. It remains to be seen whether that's going to be the case this time round. But, we did see, if we go back, this is the Nasdaq again now, go back to those highs, all-time highs in just the 22nd of November, so 16,770, traded down 1,000 points plus into the December lows, and we're back up again. So for me, the obvious target from here, the short to medium term target, is a run up back to those all-time highs, at 16,770. Let's see, 16,770, 17,000. Let's see those trends, as we always look at them every week. From off the March lows, still going. I think for me, going into next year, this is probably the big level to watch. The lows from early October, about 14,400. But for now, it still does seem to be buy the dips. S&P 500, so the broader US stock market index. Same old stuff here. We had that sell-off, of course, after the concerns about the virus, then a corresponding bounce back over the last week or so, and a positive move today on the inflation data. So I think it'll be interesting to see what happens next Wednesday night when we have the Fed's statement on interest rates. Good to see quite a bit of volatility on Wednesday night. But, again, S&P, if you've watched any of these this year, it's the same old. The trend is still up, So for me, still be a buyer on dips in these markets. That's the overall theme. Ftse 100. The Ftse, I'm going to guess it should have done well because the pound has been so weak. It's not done too bad. But the Ftse is not at all-time highs. The Ftse is really underperformed versus these other indices. The Ftse. The all-time high for the Ftse was back in 2018, just shy of 8,000. But again, trend still up for the Ftse. Lots of support, 6,800, 7,000 on the Ftse. Maybe it is going to poke out to new highs for the year. The Ftse, it's not too far away from it at the moment, 70 points away. The DAX, the German market, a bit of a strain on the DAX. Sort of does its own. It's been it feels a bit more. Quite a lot more sideways in the last 7 months compared to US indices. I think there is a concern. I was reading earlier this week that that the EU's the European Central Bank's attitude to inflation is going to be perhaps different to the UK and the US, and there's maybe a concern what impact that will have on the European economy. But overall, it was a good trade down here for the DAX end of November. The old Harry Hindsight trade pushing down into the 14,800 to 15,000 area. Still big support for the DAX. Like I say, I did the trade yesterday because it was coming off these highs, and I thought, is this a false break? It's pushed a bit lower in early trading, but it's back up today. So again, for me, if we're going to see these markets gain from here, the obvious target, short-term target for me for the DAX would be a run back up to 15,840. So we'll see. And the Nikkei. So the Japanese market, strange old year for the Nikkei. Massive volatility, no real direction after February or so. But Nikkei, lots of support again, 27,000 to 27,500. So nothing, I don't think, too interesting to say about stock markets. It was we saw a lot of weakness into the beginning of this month, but they've done what they've been doing for 18 months. We've just seen it bounce back again. So no real change for stock markets. Let's take a look at the dollar index, because obviously this is the market to watch when we talk about inflation and the potential for interest rate raises. I think I said last week, my biggest open position at the moment is made up of about 3 trades in the dollar index. I think I said the oldest trade I've got running is from February, I think, in the dollar index, and I've added a couple more along the way. Finally started getting a move on in the summer. Fairly quiet though. I mean, pretty flat over the last couple of weeks. The dollar index. I don't know how much movement we saw on that inflation number. Falls. I wonder why. Well, there we go. It fell. So it fell from 96.40 to fell about 40 points, 35 points. But for me, for the dollar index, the trend that we've been in since the May-June lows. There we go. Looks something like that. So for me, I'd still be a buyer on dips. I've got stops, take profit stops on my trades at the moment. And we'll see what happens. But I think next year is going to be another interesting year for the US dollar, given that the main market theme at the moment is inflation. Let's take a quick look at the pounds, the poor old pounds. If you are planning to go to New York for Christmas, if you can get in, it's a lot more expensive than it would have been 6 months ago. So the pound, and it was, I think, on these concerns about lockdown, because clearly there's nothing else going wrong in the UK at the moment, is there, when it comes to running the country? So it is just the lockdown weakness, the lockdown concerns, the effect it had on the economy, pushed it a bit lower this week. And you can see, just the day before yesterday, traded back to we had some funny spiky moves ahead of Christmas last year, but traded back down to where it was late November, December last year. And like I said, I was expecting a bit of strength for the pound, to be honest, over the last couple of months. It's not materialised. So for me, I'd be a seller on strength at the moment for the pound against the US dollar. We've got, where's the next big support? I suppose we could look around about 130, which is a couple of 100 points below where we are now. So perhaps we'll see this fall calm down a bit over the next couple of weeks, but still pretty weak. It's trading at a 12-month low. That is a weak market, and the threat of Plan B, Plan C, whatever it is, to do with the virus playing its part here. I thought that the euro wasn't slipping to new lows this week. It did end of November. It was at an 18-month low, maybe not quite 18 months, or a 16, 17-month low. But again, still pretty weak overall, euro against the US dollar. This was clearly a big old level, big old support on the way up. What is it? 111.70, that sort of area, 112. So again, that will be interesting to watch in the new year, I think, when we come back to it in the new year and see if it started to build some sort of base down here. But you can see the effect here of that dollar strength over the last 6 or 7 months on these markets, pound against the dollar and euro against the US dollar. So there we go. Still weak, I think, those two. Let's do gold and silver. We did 2 videos this week. We did 3 videos this week, actually, but gold and silver were a couple of them. Outlook for 2022. I'm bullish on gold for 2022. Not madly bullish, to be honest, because it's been a really disappointing year. The price of gold is down about 5% for the year to date. It's been a boring week. And not too much to say about gold today compared to a week ago. But for me, that 3.5 year trend now is still up for gold. So perhaps we'll see a bit of a recovery for gold next year. I must admit, I struggle to see it back up at all-time highs anytime soon. Those all-time highs were 2,075 from August of 2020. I don't know what the catalyst would be to drive it up there. We've got inflation accelerating the most it has in 40 years. And I mean, gold has moved, but we've got to look at a 5-minute chart to see how much it moved. It did have it's had a sharp move today from about 1 o'clock. You know, it jumped about $18, but already it's given back half of those gains, you know. So I still think it's a pretty dull market, you know. I think I often say I've got a trade running in gold in my own account, but I think I've had it for about 3 or 4 months, since about back here somewhere. And I've got no interest in doing any other trades in gold. So let's see what happens. That bigger trend for gold is up. I think we could see it crawl its way a bit higher into next year, but I'm struggling to see the case for it to be $200-300 higher than where it is now. Let's see what happens next year. And silver has been, I think I said last week, that the bogey market for me on this account this year. I did a silver video yesterday, and it's quite interesting. I mean, it's been the worst performing commodity this year, silver. I mean, some people would say it's not a commodity, it's a currency, whatever. But it's down 15% for the year to date, which is, you know, when you look at how virtually everything else has just gone up this year, you know, particularly in the commodity sector. It's been a good year, but it's not been a good year for silver. I wonder if, I mean, I did a trade in the video yesterday. I'm always reluctant to do trades on silver, but I did a trade in the video yesterday. I was a buyer, basically just to see if going into next year we'd see those old lows. Back, you know, 21.50, massive support for silver going back to September of last year. So we'll see what happens. But I think if 21 breaks for silver, I think we could see silver in the mid-teens next year. You know, maybe down at 18 would be my target. You know, maybe 16.50 to 18. But let's see what happens. That 21 level is a big one. But another market, you know, you could say, you could. I mean, there are some crazy forecasts for silver for next year. Some people saying $35-40, which I really can't see. Citibank and UBS forecasts are for $18 to $19 for silver next year. You know, you could make the argument, well, it's going to be inflation, it should go up, blah, blah, blah. But inflation is already quite high and it's not moving. You know, so it's one of those things. If a market is meant to do something when X happens and it doesn't, then that can be a sign on its own that perhaps this market's going to go the other way. So we'll see. So I think I said last week, I haven't traded silver in my own account since the beginning of the year. I managed to get out. It spiked up in February and I got stopped out. I was bought somewhere in January, I don't know. And then got stopped out on the way down. And I've not traded it since because it's just not my sort of market. You know, I'd never say a market was easy to trade, but there have been easier markets than silver to trade this year because I just found it really scrappy. Let's see what happens next year. But, you know, we're bumbling along near the lows for the last 12 months on silver. So we're not seeing a strong start to the year. Finish to the year, sorry, for silver. So that's gold and silver. Let's do oil and natural gas. Yeah, I should have done it. Maybe I'll get a second opportunity at this oil trade next week. But what made me think about it I think it was Monday, I did an oil outlook for next year. So I did there's the videos on the channel. And it was doing the video that made me think I should buy oil. And I never got around to it. And the price, of course, as is often the case, raced away the next couple of days. But I think oil's an interesting one going into next year. Because we saw, you know, concerns about the economy because of the coronavirus, this is not the second variant, the latest variant of the coronavirus. You know, so we saw a big old move. We have seen a big old move in oil off those 7-year highs at $85 down to $62.50. So it's nearly a 30% drop in oil, 25% drop in oil since October. But I was doing the video and I talked myself into thinking, well, actually, perhaps it is a buy down here. Perhaps the move has been overdone because we had these big old levels left from April. So we had oil, you know, almost down to an 8-month low at the beginning of December. And I thought that's got to be a trade. You know, it is an interesting opportunity. So for me, while $60 holds, I'd still be a buyer on dips. I do wonder, you know, it's fallen out of this trend. I wonder now if we just have choppy trading. But for now, I'm not bearish on oil. So I think definitely the momentum has changed, I think, in oil. over the last 7 weeks or so. But for me, 60, and we've got this support back here down at 57. I don't, famous last words. I don't see it crashing back to $45 anytime soon. We'll see. We'll see what happens. But for me, $60 is the line in the sand for oil. And natural gas. Natural gas has been a great market this year. And it's a great lesson, this. I think I covered it in last week's natural gas video, or the week before last. It's been a great trend in natural gas from April, and it done some good trades in this account that we use for the videos, and some good trades in my own account, because the trend has been really clear. But then up here, just when everybody, all the commentary I was reading about natural gas in October was really bullish. It was really hard to find anybody saying, oh, natural gas is going to go down. So everything was bullish, but the price wasn't going up anymore. The price has sort of stalled. And again, it can often be a sign that perhaps the move's happened. By the time everyone thinks the market is going to go in one direction, perhaps the market's already done its move. And we've seen, a sizable fall. What's it done since October, late October? The price has not quite halved, but dropped about 40%. So for me, and you can see just how low volatility has been over the last week or so. So for me, I wouldn't do anything personally with natural gas at the moment. I could be tempted to still be a buyer, but I don't think we're going to see $6.50 anytime soon. But we've got this, interesting old support from back here. It sort of spiked through that, bit of support at 350. And if you look at it historically, natural gas, the move we've been through, it does do this. It has these, if we go back just over the last 7 years, we have these sort of crazy moves up, and then the price just dumps. Bit of a crazy-ish move up, 2018, dumps, a bit of a move again. But this whole, 6 to 6.5, you can see it all here, hopefully. Natural gas over the last 12 years has not spent much time above 6. So perhaps that was another sign as well in retrospect, what went on with natural gas. But I think for me, it's a bit of a wait and see market at the moment, natural gas after being a great trending market for this year. We'll take a look at the cryptos, then we'll jump into the questions and answer any questions. So it still looks pretty weak. A big move over last weekend, wasn't it, in Bitcoin? The weekend trading. So the market last Friday, so we were doing the live stream last Friday, closed at 51,006, traded down to 41 on the Saturday. 20% move in one day. I suppose what could be the trade here for Bitcoin? For me, the aggressive trade would be a buy now. Buy now at 48.6 with a stop loss underneath that most recent low, which is 41.8 from last Saturday. Loads of support, well not loads, but lots of support coming in at 40,000. So I think it's interesting to watch next week. If you were more cautious, which would probably be me, I would take the view that the trend is still down on the old Bitcoin for now. So being patient is no bad thing for me in Bitcoin. And I've said it a few times on these live streams. I do wonder if we're going to have to wait quite some time to see an all-time high for Bitcoin again, because it was really, if we go back to March of this year, it would broke out through the Feb highs above 60k, sells off, breaks off again, then just dumps. This time round, we've seen it again break out to all-time highs, but there's no momentum up at these all-time highs, and it falls back again. So I just think, I wonder, is 60 to 70k the line in the sand for Bitcoin? I don't know, but I think as I said last week, I think it's a market that teaches people bad habits, very bad trading habits, because people get rewarded for hanging on when it halves, because it'll double or triple again. There will come a point, of course, where it won't double or triple again. Have we seen the top for Bitcoin already? I don't know. Too early to say that. But an interesting one to watch next week. But for me, I'd still be happy to be a bit patient on the old Bitcoin for now. And Ethereum, I think not quite as drastic as Bitcoin, but another one, where we broke out to all-time highs in November, and it hasn't really had that much momentum so far. So for me, both interesting to watch. I'd still be leaning towards buying the dip as a trade on both of them, but I'd still be quite happy to be a bit more patient, to be honest, on both of those. Right, we're going to jump into the questions in a sec. Just a quick reminder of the stuff. Capital.com to find out more about the company. Open an account, download our trading app. David.Jones at Capital.com. If you've got any trading questions after this, at Jones the Markets is me on Twitter, and jonesthemarkets.com to find out about the training course I run, and follow Capital.com on YouTube, Twitter, and Facebook. Right, let's have a look at the questions. Can we have a look at fuel cell stock? Fuel cell. Let's have a look at those. I'm guessing it's some sort of alternative energy thing, is it? Stationary fuel cell power plants. Okay, yeah. I would say I did have a quick look at this actually before we started, because I saw your question come in. Another great example of the importance of having some sort of risk control in place, because the thing in February was $28 and it's $7 today. So for me, an aggressive trade here, I would be a buyer, but I would want my stop loss the other side of the September low. So $5.30 is the September low. It's $7 today, so it's about 20% away. But it's a volatile stock. So for me, again, I think it might be a long time before we see $28 again. But for me, I could be tempted to be a buyer on the dip, and whether that is today or next week. I think it's, if I really had to do a trade, that would be the trade to do. But I would want my stop loss. I would want to have it the other side of these lows, because I take the view, look, if these lows get broken, the thing could potentially fall off the cliff again. So that's what I would do with that one. So we'll see. Someone did ask about the trades we did last week. We did 2 trades last week, and I thought they were doing okay. So we did a Salesforce trade in the live stream last week at 71. I mean, it's up 71 quid. That was a 100 quid risk. We'll take a look at that in a minute. And we did a euro yen trade as well, which is up about 19 quid last week at 3:30, just as we finished. So let's take a look at that. I remember Salesforce had got hit really hard, hadn't it? And I think it was one of the give it a last chance trade. Here we go. So we'd have done it about here, and it has bounced back a bit. So that's worked out okay. And the euro yen, I think euro yen was a lot higher. Oh yeah, it had a big move earlier this week, and it's come off a lot. I probably should have moved the stop if I was paying attention. But yeah, and that was based on the false break between those lows. So let's see what happens. Right, Zoom. We're looking at one of the videos we're looking to do next year. Zoom down, what we're doing is 5 Nasdaq or 5 technology stocks that might be interesting. And we're going to look to do that beginning of the year. And one of the things I was looking at this week are worst performers for the year. Worst performers, best performers, high PE, low PE, that sort of stuff. Not surprising. Zoom was one of the worst performers this year. Peloton is the worst performer, down 78%, I think, the stock of Peloton is this year. But here's Zoom. So Zoom, of course, video doodah, video conferencing, video meetings, did incredibly well during the 2020 as the pandemic spread and everyone was locked at home. So from March, went from about $110 to, that's pretty amazing, isn't it? Above 560 in October, and now it's gone from 560 back to 180. So for me, I would say I'd be in no hurry to buy. That trend is still down. For me, it's a long way away from the trend at the moment. It's only in the last week it's moved to a new low for that downtrend, so hit its worst levels since May of last year. So to me, it's still pretty weak. I think it's an interesting stock to watch because of what it is and what it does, but still looks weak to me. So that would be, I wouldn't have much interest in that one at the moment. Let's have a quick look at Peloton while I mention Peloton. Let's see what that one looks like. Peloton, there we go. Oh, that looks, that's still, look at that. That's down to May 2020 levels as well. $40 and was $170. So that's lost, what, 70%? Something like that, off the highs. And they're only the January highs. So for me, that still looks pretty weak. So that's Zoom. Moderna, I did see, I think Moderna fell at the open today. Clearly a lot of volatility in the stocks because the old the coronavirus latest variant, Omicron. It looks just really volatile. I mean, what would you do? I suppose. Again, I wonder with some of the clearly very news driven some of these pharma stocks because of the vaccine. The trend is up, isn't it? So I'd have to be a buyer. Trend is up, so I'd have to be a buyer. So for me, if I was a buyer now, maybe that's the trade. Should we do that trade today? So if I'm a buyer now at 248, the closest I would want my stop, the other side of those lows, which are in at 210. It's a pretty volatile stock anyway. Let's go 190. So let's buy some Moderna. So we're going to put a stop loss in at 190. We only risk, what do we risk? Can I buy 2.2 of a stock? We only risk $100. Oh no, we can't. We'll buy two. Buy two Moderna, massive trade at 250. Stop at 190. Let's see. Send that through. There we go. So I think that trend is still up. Let's see. I mean, clearly very news driven, I suppose. Let's see how that performs over the next couple of weeks. Does it get something of a lift? If it got a lift back up to the highs just from early in December, I mean that's a 50% move from where we are now, 245 to 360. So let's see what happens. If you don't use leverage, do you still pay overnight fees? No. But with us, if you trade with us, everything you trade is leveraged. There isn't the option to not use leverage. And I really wouldn't get too excited or too distraught or too stressed about the overnight fees. In the great scheme of things, I'm just bringing you up now, showing the fees on this account for the trades I've got open. In the great scheme of things, the fees are not that much. Contracts for difference, the sort of things we trade here, are not designed to be held for like 5 years. But if you're holding a position for days, weeks, and a few months, for me, the fees always pale into insignificance. So all the trading I do, short to medium term trading, is all leveraged. Look at Salesforce. Salesforce cost me 33p a day. So since last Friday when I did the trade, it's cost me about £2.40. And the trade is up 75 quid, as you can see here. So for me, clearly fees have an impact, but they don't have a massive impact. But it's a strange one because I have read, we have done some research, and lots of clients close their trades out really early to avoid paying an overnight fee. Which again, for me, I think, well, if I'm paying 33p a day to Salesforce, I've got a 9 stock position in Salesforce at the moment. If the thing only moves 4p or 6 cents, that's going to cover the overnight fee. So yes, it is a cost, but I really, personally, I don't even think about overnight fees. I just make sure that the broker I'm with is charging sensible fees, and we do. I think we've got some of the most competitive overnight fees in the industry, but I wouldn't worry about it, personally. Gold is killing me. Gold is just a dull market, It's just let's hope next year's a bit different because it's really popular on our channel. Gold. Whenever we put a gold video up, get loads of views, but it's quite difficult week in and out sometimes to say anything different about it because gold at the moment is trading where it was this time last year. Volatility, yes, but direction, no. I feel your pain a bit on the gold price. Gold. Lots of chat about gold in here. Coffee's been a good market. I said about some of the markets I've got trades in. Coffee has come off a bit this week. Coffee. So for me, I've still got an open position in coffee. That trend is still up. It's a long way away from that trend line. I was looking to add into coffee. So for me, that's maybe a trade for next week if this sell-off stops and it starts to make a base. But it's been absolutely a crazy year really for coffee. It's gone from $1.24 to $2.30 where we are now. It doubled. It was double a few days ago. So it has been a bit of a nuts year. Banks manipulate gold and silver. Now it's interesting that because we did a video about 3 or 4 years ago because some JP Morgan traders were found guilty of price manipulation. And of course, there's the fact that I think JP Morgan are the largest holder of physical silver, I think, because they have an ETF, silver ETF. And on the silver videos, whenever we do a silver video, there's always a lot of complaining about manipulation. People go, oh, so isn't it terrible? Da, da, da. And I think if you're that cut up about a market being manipulated, don't trade it. Go trade something else. Trade something that isn't manipulated. Because the market is, I don't even know if it is or isn't manipulated, and I don't care. It's just a price. But I wouldn't. I think particularly with silver, there are people who for years now have been waiting for silver to get to $50 an ounce, and perhaps it never happens, or it doesn't happen again for 50 years. So I wouldn't. I wouldn't personally. I think it's good advice to not get too obsessive about one market. Trade the market that moves, and if it stops moving, go and trade something else. What do you think about the recent sell-off of dollar yen? I was going to buy it yesterday. I didn't. But let's have a look at the dollar yen chart properly. A way to break out by the dip. Dollar Canada. Yeah, I do have a dollar Canadian dollar position. So dollar yen, I was looking to buy. Was I buying yesterday? Or was it earlier in the week? I don't know. Actually, looking at the dailies, it's a difficult one, isn't it, dollar yen? I suppose. Because it is the whole, the dollar has been a bit flat over the last week. I mean, for me, I would still be looking to be a buyer. But I think, as you say, it's a question of where do you buy. If I was a buyer today at 113.30, then I'd want my stop the other side of 112.50 at the very closest. But it's been such a flat week for the US dollar that it's difficult, isn't it? So I'd rather sit on my hands and see what happens, see if the volatility picks up, and if it pushes below 113 on dollar yen. But I'd still personally want to be a buyer on dips. And dollar Canadian dollar, I've had that trade running for a while, personally, and I think it's been a bit more bullish this week. I think I put the trade on. I can't even remember. I think it was in here somewhere in the summer. So for me, I'm still in the trade. What would you do? What would I do now? I mean, my target would be for a run back up to 129, 129.50. If I was a buyer today, where would I put my stop? The absolute closest would be the other side of 126, personally. But I think it's difficult. I think it is difficult, the dollar at the moment, because we have, just going back to that dollar index. We've had such a good run off the May lows. Great trend, great buying opportunity there in late October. And it's just been a little bit stuck up here for about 3 weeks now, the dollar index. And clearly we're seeing that in the likes of dollar yen and dollar Canadian dollar. So tricky one. So for me, bullish on both of them, but still a little bit tricky. What do you think about NEO? I had a trade on NEO. I got stopped out of it. I think I'd still be a buyer, or maybe not. I don't know. It's the NEO is the Chinese electric car company, isn't it? I think I got stopped there. Oh, that was unfortunate. I got stopped, and it's bad. I would give it one last chance and be a buyer, and put a stop loss the other side of 29.60. But it's not the most exciting stock, is it? Look at it. It's just been. Look at what Tesla's done this year, for example, and this has just been flat for 9 months. NEO, hasn't it? So I don't know. I think I did it. I think I bought in maybe here somewhere. But for me, it's just a bit sideways. So it's not the most exciting stock in the world. Has Alibaba hit the bottom? I'm going to say no, just from memory, just from looking at that chart. I think it's a braver man than me who calls the bottom in the massive downtrend in Alibaba. It's been a year, 13 months now, since so we've gone from $320 a year ago to 123 today. Massive sell-off in Alibaba. So for me, I would personally just treat that as a dead cat bounce. So if I wanted to be a buyer, I'd be in no hurry to buy just yet. I think there's a lot that needs to do to come out of its downtrend. So I think if you really want, for me, I mean for you it might be different, but for me, if I really wanted to be a buyer in this one, I'd be quite happy to sit on my hands well into January, I think, for this one, because that trend is still down. But it's been interesting, isn't it? I think the way it's moved. What about Matic US dollar? I've got absolutely no idea what that is. There we go. That's what it is. What is it? Is it a crypto? Don't know. Got no idea. What is it? Don't know what it is. I'm guessing it's a cryptocurrency. I mean, the trend since July is still up. Pretty volatile, isn't it? But I'd probably rather be a buyer on dips. I mean, lots of support at 140. But it's another one, isn't it, where I'd rather have a better dip to be a buyer. And is it a currency? I don't even know. Can someone explain to me what that is? I'm quite curious now. I'm gonna have to Google that now. Hang on a second. Let me just Google that over there. What is it? Matic US dollar. Polygon. Okay, I'm still none the wiser on that. I think it is some sort of crypto, isn't it? Okay, what's next? I've lost the questions. Hold on a sec. Oh, Lucid and Rivian. Let's have a quick look at those. So 2 other electric car companies. Lucid is a good-looking car, isn't it? I think, but I think it's about twice the price of a Tesla, isn't it? Only came to the market in July. For me, I think I've got it on my watch list because I want to be a buyer of the dip because I like the look of the car. But so for me, I think it's an interesting one to watch next week because we don't have that much data. Don't forget, we've got. I think I would be looking for sort of 28 because it was the highs for a little bit. 28 to 32 to be support. So should we buy it? So let's buy it today. So we'll buy Lucid and we need to give it room because the thing is clearly they're volatile stocks. We'll go 28, and then at least I can maybe keep an eye on it in here and see. Actually, and maybe end up buying it for myself. Let's buy those. How many can we buy? 14, 10, 7. Oh, I can't even do the maths. There we go, perfect. We buy 14 Lucid with a stop at 28. Wide stop, but volatile stock. 100 quid risk. Let's send that one through. There we go. So I think it's. I mean, if for me with my own money, I probably wouldn't buy it today, but I think it's an interesting one to watch going into next week and next year. And the other one was Rivian, wasn't it? The car, I think, when they came to the market, weren't they the 3rd biggest car maker by market cap without actually ever really having shipped a car to customers? I think they have shipped cars, but they have gone to mainly Rivian employees. So for me, even less data on Rivian. It's only been around a month. I suppose if you really wanted to buy them, you could buy them now, and I would put my stop loss the other side of 95, so below where they've ever traded. They've never traded below 95, so I suppose that could be one. But I mean, it's interesting with all these companies, that don't actually ship anything. But for me, let's see what happens. We'll come back to it in the new year. But I think the Lucid stock because I like the look of the car and we've got a bit more data. Robinhood, the broker, of course, very much caught up in the whole meme stock thing this year. All right, that's been a disaster, isn't it? Or it's a disaster on the hourly chart, let's say. Look on the dailies. Oh, my word, look at that. Again, not that much data. That to me still looks really weak. It's gone from 84 to 21. So for me, absolutely would not be a buyer just yet because the trend is still down. An interesting one to keep coming back to because, clearly it being a broker. But, that trend is definitely down. And when did it break below? So the low before it went crazy was around 30. I mean, that was a big sign. The break below 33, and it was trying to hold for a few weeks above 33. It went below there, and bang, here we are down at 21. So for me, interesting to see it, but still pretty weak for me. Heineken. Is Heineken a buy the dip? Let's have a look. It's a bit boring, isn't it? But I think I would probably be with you, actually. I think I probably could be a buy the dip on Heineken. Oh, yes. There you go. That is that trend since March. Well, good spot that is. I take back my earlier cynicism. So for a buyer at $90, is it dollars or euros? Probably euros, I'm guessing, isn't it? Buyer at 90.60. The closest I'd have a stop, the other side of let's call it 85. But I think that's almost a textbook uptrend, that one in Heineken. So I think that's a really interesting stock, that one down here. So that's Heineken. Sumitomo. Let's have a look at Sumitomo. I don't know if we cover it. 8053. Let's have a quick look. There we go. Thank you for the code. That's really useful. Sumitomo Corporation. Cup and handle. I must admit, I'm not really a fan of all that sort of cup and handle type stuff, but fair enough if it works for you. For me, it looks a little bit boring. It's almost, I mean, understandably, perhaps carving out a similar pattern to the Nikkei this year. So a little bit sideways, not, I don't know, it's a bit of a nothing one for me. If it breaks above sort of 1680, let's call it 1700, perhaps gets a bit interesting, but has struggled up at these levels since March of this year. So yeah. What else have we got? Tesla. Yes, let's check Tesla. We're looking at all these other EVs. Let's have a look at Tesla. I still think it's a buy the dip, Tesla. I did say 2 weeks ago I should have bought them at 1,000. Now I've got the perfect opportunity to buy Tesla. So maybe. I still, we've got this trend that's been in place now. Well, actually, if we go back, we could take it all the way back to there, couldn't we? But I think I was looking at it from May of this year. So for me, it'd be a buyer. The only question is, where does your stop go? And this is always the problem, isn't it? When you see stuff that accelerates away, where does your stop go? The closest I'd want my stop, the other side of 950. But that's only the low. It's a low from this week. So it's not exactly a major low. A bit more room is down here at 840. But maybe we'll see it under some pressure. I think, did he sell a load of shares yesterday? I'm sure I saw something in the paper this morning that Elon Musk had sold a load more shares. But for me, it does appear that the market at the moment feels like 1,000 is about fair value for the stock. We've seen them sort of flip-flop around here. So I suppose it is interesting down here, isn't it? But for me, I'd probably want my stop there at 840 on Tesla. So let's see what happens. How are we doing for time? We've got about 10 minutes left. Do you pay overnight fees? Yeah, we covered that. Covered the overnight fees. Sterling yen. I've got a trade on sterling yen. It was doing well for a bit, and it's not anymore. But I think it's a bit bounce or bust, sterling yen, I thought. Great market earlier this year, sterling yen. I think it was a lot of my profits, in perhaps the first 6 months of the year, were from sterling yen trades. And then it just sort of stalled in May, went a bit sideways. We've fallen out of the trend. I would be a buyer of sterling yen now. Clearly nothing today is financial advice. But for me, it's interesting down here because 148 or thereabouts has been a really big floor for sterling yen. Clearly, the pound is weak at the moment. We see it at a 12-month low against the US dollar. But for me, if I really had to buy the pound at the moment, perhaps sterling yen is the better trade. But that I think that's a really interesting market to watch next week. If we take we looked at the Canadian dollar index, and I think it's a bit tricky at the moment. But I think sterling yen's an interesting one to watch next week. Does 148 hold in sterling yen? So let's see what happens next week. What if you use one-to-one leverage? It won't have fees. No, you won't have fees with one-to-one leverage. But we don't offer non-leveraged, as far as I know. If I do a trade, it's going to be a trade with leverage. So you're right. If you buy some stock in Apple, if you buy 1,000 Apple shares and you're not using leverage, you won't pay fees. You'll pay commission normally. We took Robinhood. Any treasuries to watch? We don't actually cover treasuries. I did a trade on the Bund yesterday. If you follow treasuries. But I can't bring up a chart of treasuries on here because it's not a market we cover. We did oil early on. EQT Corporation. So look at those. I don't think we've looked at those before, have we? EQT. Is it that one? That looks it's a little bit boring again, doesn't it? I think you'd say, or I would say, the trend is up, isn't it? Trend is just about up, and it's sort of having a bit of a mess around. But it looks a bit boring to me, that one. So I don't know what I do. It's just just been a bit stuck in a range since May, hasn't it? So for me, a little bit, not too much going on next week. So no, there's a lot of talk. There's Matic thing today. Crypto, okay, yeah. Polkadot, is that another? That's got to be a crypto, surely, with a name like Polkadot. Yes, yeah. I don't really like talking about loads and loads of cryptocurrencies. Still looks pretty weak, doesn't it? Interesting to watch next week how it does around 24, but it's halved since the highs in early November. Personally, I like to stick to gold and Ethereum, Bitcoin and Ethereum, and not so much the rest of them. So, what do you think of Ford? Yeah, Ford have done really well, haven't they, this year? I think because of their pledge to move into the EV market, done incredibly well. I mean, if we go back to where was it at the beginning of the year? It's about $8, and it's $20 now, and that's a fantastic run off those lows in March when it was $4 March last year. So for me, it's another one. The trend is up, but would I want to buy it up here? I'd rather wait for a dip. And the problem is, if you wait for the dip, perhaps the dip never comes. So for me, I'd be with Ford, definitely be a buyer, just a question of where. If it broke 21, then we've got a breakout trade on, and perhaps there's a trade to do then with a stop the other side of 1850. It's been a bit sideways, but undeniably strong forward. So the trend is still up, I think, for that one. Coinbase. Let's have a look at that. We haven't come back to that much this year because they, of course, came to the market this year. I don't know. It's been a bit dull, hasn't it, since the excitement of the IPO back in April. It's all been a bit dull, hasn't it? So again, if I had to be a buyer, but I would probably want to stop the other side of $200. $200 has been a good base for Coinbase since May of this year. So that I think that looks a good place for a stop. But for me, I'd rather sit on my hands and see if it continues to drift a bit next week. Intel. Let's have a look at Intel. I think going back to looking at Nasdaq stocks, I think Intel, on the data I was looking at, had one of the lowest PEs, one of the lowest price to earnings ratio in the Nasdaq 100. It looks a bit. I'm surprised that the chart of Intel looks like that. I suppose. I mean, I think they have been losing share to the likes of Nvidia for a while, haven't they? But that has, broadly speaking, gone nowhere for 3 years. The Intel stock price, $50 today. 42.5 has been a massive floor for Intel. So again, if I had to do a trade, we've seen it hold above 48 since October. But for me, there are probably more interesting stocks out there than that one. We looked at sterling yen, Dollar Tree. Let's have a look at that. So that is it retailer or is it a bank? I can't remember. Discount retail stores. Okay, there we go. Aren't they the one that said this stuff wasn't going to cost $1 anymore, and they used that as showing how inflation was, or am I getting confused? Whatever. But it's gone nuts, isn't it? Since October. I must admit, I would have been caught. I wouldn't have caught that. This is another one. I think it's another interesting example of how, for me anyway, it's difficult to manage risk on trades like that because the thing's gone from 85 to 150 in a couple of months. So for me, if I had to do anything, I'd be a buyer. Where would my stop go? Probably the absolute closest, about 125 or something. So, great move. Another great one if you're in it. A great one. Quite a volatile one, after not being all that volatile at all for quite some time. But for me, I'd be a buyer. I'd be a buyer on dips. That's the highest it's been. And we've only got data going back to 2016. But big move. But as usual for me, managing the risk, where would your stop go? It can be tricky on some of these more volatile stocks. Adobe, the famous PDF company, Adobe. They were doing well last time. I think everyone was going long PDFs. it looks good, doesn't it? It's been a bit. It's not done much since we last looked at it. I don't think. Trend is up though. So for me, it'd be a buyer. The closest I'd want my stop, the other side of $600. If I wanted to give it a bit more room, the other side of 548. So yeah. So it's okay, isn't it? I think. We did gold today. Yeah, if you want to find out about trading, go to jonesthemarkets.com. Under 10p ratio, that's Intel. Yeah, Walmart. I did see Walmart come up quickly, and I saw it was. Where's it gone? Walmart. It is in its trend, isn't it? Because we've clearly looked at that before. Because I've stuck that trend line on from before. I mean, that's a good trend. In we are what 3 years into that trend now for Walmart. So perhaps not the most exciting stock in the world, but a great performer, relatively speaking, from a trend point of view. So for me, I'd be a buyer. If I was a buyer now at 138, where would my stop go? The closest I would put my stop would be the other side of 134. Perhaps a looser stop is the other side of 125. But the trend is up, isn't it, for Walmart? It's not setting the world on fire, but it's doing okay. We did look at Rivian. Lloyd's of London. Do you mean Lloyd's Bank? Because Lloyd's of London is the insurance company. Or is it? What's that? What is that, Lloyd's? That's Lloyd's the chemist. That's Lloyd's Bank. We've got two Lloyd's Banks. Which one is it? Is that the UK listing? Yeah, that's the right one, isn't it? 46p. It just looks a bit dull. I think we've looked at it before because I had this trend line on it before. It looks, it did have a go, didn't it, at pushing out in November. So for me, to a new high for this recovery. So for me, I'd be a buyer, but I'm never a fan of these. It is a penny stock, isn't it? Which seems a bit strange to say it for a relatively big bank. But for me, I'd be a buyer, but I'd probably rather wait to see if it drifted down to the low 40s. It's just a little bit dull. Costco has had a good year. Let's have a look at Costco. What's the view? Oh, that is a great trend, isn't it? So we go back. So again, I think we've clearly looked at this before because I put a trend line on it. So we go back to 2018, and then the thing has really accelerated this year. Like you say, it was $340 in March, and we're 548 today. Absolute great trend. So for me, I would be a buyer. Again, the only question would be, where would your stop go? It's having a good day today as well. So for me, the closest I'd want my stop, the other side of the lows for the month so far, the other side of 514, probably even below 500. But a great performer that. So for me, still a buy on the dip. Again, the only question is, do you wait for a much deeper sell-off? We did look at the Nasdaq first thing. What I'm going to do, I'm going to wrap things up there because my time is up. But as usual, to find out more, go to Capital.com. Any questions, drop me an email, david.jones@Capital.com. Follow me on Twitter @JonesTheMarkets, and to find out more about the training I do, go to jonesthemarkets.com and follow Capital.com on YouTube, Twitter, and Facebook. So like I say, this is the last live stream until the new year now, but we'll still be doing regular video updates every week on the channel, pre-recorded videos. We've got one coming up I think in the next week or so on Wall Street bets and GameStop and AMC. How well or how badly would you have done if you were trading the meme stocks? So make sure you're subscribed to the channel. You're watching on YouTube now, so if you're not subscribed, click on subscribe on the channel. And that's it. So we'll wrap things up there. Have a good Christmas, holiday, New Year, whatever. We'll do this all again the first Friday in January, I think. We'll kick off the live streams again. Thanks.